Good afternoon. My name is Scott Redler, Chief Strategic Officer at TWTR.com. Welcome to today's recap. So, new month. Started off the week, I guess, on a positive note. We talked about October, up 11% from the lows that we hit in September. So people weren't sure what would happen. Would new money come to work and would it push the market a little bit further? Or was the vested interest of the mutual funds year end on October 31st going to go away? So nobody really knew what would happen. All you knew is you had pivots, you had levels, and you had things to work from. Now I came in today net short after the little sell signal on Friday, and within the first 20 minutes covered because I'm not a bear. I just figured maybe we would get some downside follow through, which didn't happen. So got away from thinking short, got away from cost averaging, which a lot of guys have been doing for the past 3 weeks, and a lot of trading accounts have been blown up, and figured out how I participate, make some money back from being short overnight, and feel a bit more comfortable. So first things first, you look at the chart of the SPX, and you will see that some right here, on this down day Friday, thought perhaps we would get to at least the 8-day moving average, which would have made sense. Why not, right? Look at the size of the move that we've had. Look at the rally that we've had since the August lows, since the double bottom reversal here in late September, to taking out this pivot, to taking out this resistance, going up, retesting it, and blast off. So, at this point, nobody knew if there would be downside follow through. But you know what happened? We held again. This stair-step rally has pretty much been intact since we took back the 8 and 21 day right here. One of Red Dog's rules is if you are above the 8 and 21 day moving average, you try and be long. And not only has it been above the 8 and 21, it's been above the 8 this entire time. So lots of people out there just trying to short the rally and cost average it up. You're probably a little frustrated. I know I was short overnight, and all weekend long I was frustrated thinking if we go higher. So I couldn't imagine guys doing it this whole way up. So anyway, where could you have made adjustments? You could have made an adjustment when we took out Friday's high at 2,094, or a little bit sooner. With me with the spiders, I covered at 208.80. Why did I do that? Because that was the spot we broke down from. So if you go take a look at the 5-minute chart, you'll see why I use that. And on the VTF, you saw me cover, because if you go right here, basically into yesterday, where is that? Into the move lower. Where's the 5-minute chart on here? Let's go here. Where is, okay, so basically I think into the end of the month, okay, we came down to here, okay, and then, right around this 208.80, actually you could have used one thing first, was this 208.40, which we were above pre-market. So really, I was looking at to see, this spot right around here, which, if it started getting above this, just to me wasn't that weak. So right around this 208.80, which took back this zone, I was like, I'm out. Could have waited for the prior high and could have still saved your money. But for me, I wanted to get out of the way and try and get involved. And you did have a last-minute little sell down, but whatever. We'll see what happens tomorrow. Overall, looking for quality longs and trying to ride the trend has been a heck of a lot better than fighting it every which way or ranting about it. Here was your Red Dog. Here was at the capitulation low, whatever you want to call this, or the flash crash low. Here is a small Red Dog reversal right here. Here is your gap to start this trend, and then basically it's been intact the entire way above the 8-day moving average, and then took this out. So, when I was on Bloomberg, I talked about a few things that needed to happen to broaden the rally out, to keep it going. One was the Russell had to play catch up, the buyers had to get out of the danger zone, and oil had to stop leaking, and the XLE could participate. On Thursday, Friday, I know we tried being long the Russell and the banks, and they shook it up, which is what these algos have been great at doing. So if you got out, like I got out on Thursday and Friday, didn't accumulate, you had some spots to get in today. So now you look at the IWM. I posted the chart this morning, basically saying, not the greatest thing to try and break out and pull back in, but overall, here's the bottom end of the range, still held the top half, and basically, once it took out this little spot, shorts probably covered, and some probably got long a little bit above this 116, and now here you go, into some resistance. But you would think that this could travel a little bit higher. You have the Qs basically at highs of the year, and this having basically spots, pretty pretty, a decent amount higher. So I guess this is your next one. It'd be nice to get 2 days in a row, and I am long the Russell, versus the choppiness. You seem to have a big day, choppy, big day, choppy. So it'd be nice to see if you get some continuation, from this type of pattern. It looks a little bit like an inverse head and shoulders pattern, not exactly, but if it were to be one, okay, with this is the left shoulder, the head, the right shoulder, this being the neckline, look at that. First time, tried to go, couldn't, held in there. Really the measured move is from 108 to about 116, and that's 8 points on top, and that takes you all the way back to, a lot higher. Obviously there's a mess of resistance here, but we'll see what happens. IBBs, continued higher. This, if you look at the exponential, this got reclaimed. Okay, now all of a sudden, this little pivot here, if you were still long when it broke above, you're making good money. Little flag type pattern after breaking out, held in there. Little reversal pattern here after a big move from below 300. It lasted 2 days. Now we're at highs. So people like, where can we go? I guess, your next spot could be into this resistance. Doesn't mean it has to get there in a straight line, but methodical. Here's support that held. Okay, got out of the danger zone, broke above this area for a trade, gave you actually a 2-day trade, pulled in, continued. XLE, also, we went over this in the morning call, talked about how it reclaimed some moving averages and started acting a little bit better again. It basically held the moving average, just broke out above this little descending channel. Next target for this could be somewhere into the 32s. Acted a little bit better than the OAHs, which could also give you, this could be your day one. Okay, day one in the OAHs I wound up holding here. Simple, what's it called? The moving average is all the way up there. So that's 34-ish, so it could easily get there, or not easily, but it might get there, and this is the high of that spot. So if it wants to continue, it can. So right there you see the Russell could play some catch up. The bios have been out of the danger zone. The XLE and OAHs are, moving higher, and that's even with, by the way, the energy stocks with oil a little bit off today. So if oil happens to trade up tomorrow, okay, after being in this tight range, those energy stocks should probably continue. And here is your, your tight range here. Okay, so we'll see what happens if it can get back to where it was up here, and that would help drive the oil stocks. The oil stocks were all at the higher end of the range here when oil was 50, so obviously they're acting a little bit better if, the USOs are here, and they're already almost at the top end of the range. So, that goes to show you, like, look at the XLE just one more time. It's already back at the upper end of the range when oil isn't. So it means that money's trying to get in here and could have it continue. A lot of guys on the VTF were talking about CVX today, which gave you a really nice move. Look at the size of that move above this channel. Congratulations if you're in it. Could be a day one. Pretty big day, so it might not just explode, but definitely has some room if you, if you're thinking about playing this more to the upside. This is where, it broke down from. So perhaps it could see that area. 200 days is right there, which could, produce a pause. XOM also had a pretty decent day. Look at that, pow. Okay, above all the moving hours. Just actually took it back. So, definitely some spots to switch gears, definitely ways to trade tactical, sectors and stocks, to time them. As far as the banks, came back pretty quick today. We'll see if there's any continuation, in these names. Goldman, is flagging. Definitely a little pain in the tush that it came back in, but if you look at it in hindsight, what it do? It broke out, retested that, and still held this uptrend. So maybe, look for a little bit of catch up if it wants to get above that. JP Morgan, I actually bought back today. Looks decent. It also, pulled back to test the 8-day moving average that held. It's been the rally area, and now here is your next resistance to play for a little bit of momentum to fill this potential gap here that we talked about last week. And then you go into, some high beta tech. Amazon was off early morning, but then found a bid, still above the 8-day, trending near highs. Google also is lower earlier on, turned up. This seems like it's going to be the next stock, to take out the earnings high. It's right here. Okay, nice little red dog reversal into this spot. I'm not long Amazon or Google, but I'm actually long Apple. I repositioned into Apple today, thinking that, it's acting better. This was that, tight pattern that we talked about over a week ago that gave you a nice trade here. And then after earnings, we talked about could it hold the gap, and it did. Pause, and now, into this spot. Perhaps this is enough of a flag to continue it up, this morning in the morning call, I said if someone were to ask me, do I think, it closes more towards this 128 year end or down to the 108 area, I said here. So maybe, maybe it's right. So with the buyback happening in November and this and that, seems like maybe the path of least resistance could be higher. It's actually done a whole lot of nothing on the overall year, but easy if some people want to, with the liquidity trade and the high beta tech trade that can continue up. Qs, you're going to see the headlines that the Qs are at, 2013 highs, even all-time highs. I said you can't get too bearish when you have a big open pro gap like this, and now it just extended above the prior peak here. So, this could continue to be the leadership spot while other things tend to play a little catch up. That's why, I said we have to focus on some other areas. It can't be all just mega cap, high beta tech. It has to be some other areas. So today we saw some of the areas catch up. And again, be nice to get a little follow through. Facebook, I bought options today. I talked in the morning call that maybe we see a red dog reversal, that my option strategy expired Friday. I wanted to get a new one. So when it did this red dog reversal here, I got into the hundreds, okay, because I feel like if it has a great report on Wednesday, it should take out this 105 and, see north of, or close to 110. We had lots of nice tradable patterns here. You had a red dog reversal here before taking out this descending channel, and then you had another nice pivot here when it took out 100, and now it's back into this area and could go sideways. Maybe it gets back up here prior to earnings, and then I'll turn it into a call spread, or it doesn't. But either way, some guys made some good trading money too. Sperling was all over this. Traded below 101.18, went as low as, actually, what was the low here? The low was 101.65, went to 101.18, so I don't know, what is that, 40 cents, to then close at 103.30. So you basically could have made almost, $1.50 for 40 cents. Pretty calculated also. You haven't had many pullbacks in Facebook. Twitter bounced. Some guys were saying the reason why you had this big down move after retracing after earnings was a fund had to get out for end of year. So I'm just sitting in the calls that I bought right around here. I actually added some December calls when it was negative, and now we'll see what happens here if it can work its way back up. Still has a lot to prove. I'm not, I might trade it from time to time, but I'm going to try and sit in the options. I got the 30s, from a little bit lower than this, one in 3 weeks, one, in 2 months, and we'll see if it bounces back. LinkedIn, what are you doing? Held the earnings gap, maybe with a little bit of time, and a little bit of, a little digestion. This earnings gap could turn into another trade above this spot. Let's see what Expedia did. Probably rested a day. Let's see. Oh, go back to Expedia, see what it did above its earnings gap. Yep, traded into it a little bit, but again, holding above the prior breakout. So, oops. So probably needs some time here. We'll see how much time it needs, and probably not going to trade it for a bit. After the close today, you had FIT. Let me see what their headline was and what it's doing. More importantly, FIT is down $2. So we'll see what happens next there. So FIT down $2. I don't know what the report is. I'll go into that in the morning call tomorrow. If you look at the chart, we'll see. It just had a little bit of a breakout move here above this spot, 38.90, so 39. So this would probably be a spot that it should want to hold if it's going to be any good. It's a new issue. I wouldn't say it's priced for perfection, but they want to see growth here at this point, see if this holds or not. If you were to trade it after hours, you're probably waiting for it to clear 42, which obviously doesn't look like it's above 42 now, so I would wait there. Tesla woke up a little bit today. I don't know if you get another day, but poked its head above this little mini range here. Didn't quite get down to this 202. I think their earnings are tomorrow, so maybe that's why some shorts got a little worried that it didn't break this quickly. But at this point, the stock to me is still broken. And if you caught a day trade today because it was gapped up and you thought maybe they would squeeze it, congratulations to you. Maybe it's up tomorrow before earnings, who knows? But this is your resistance. It's tried this a few times and failed. Stock's been broken ever since right here. This outside day was what changed the complexion of this stock, and that was after it broke out above this ascending channel. So you always want to be on alert when momentum stocks lose the 821, and and here's when it lost the 200 day. That was a while back. So we'll see what happens now. We'll revisit that tomorrow. So all in all, this rally is definitely long in the tooth. There are ways to handle it, ways to try and feel comfortable to stay in. You don't have to be in things overnight if you don't want to be. There's been more than enough action intraday. I feel like the overnight trade has been hard. It steals from the prior day as things have bigger moves and then they get no follow through the next day. We'll see what happens tomorrow. Some catch up happened in the bios, and the Russell popped back up according to the chart we put in there this morning. We'll see if there's something there for tomorrow. Energy was up with oil down. We'll see what goes on there. And the spiders made a new high with high beta tech at all-time highs, or the Qs. So we'll see. I'm not even getting into more charts. I got to get out of here. We'll see what happens tomorrow. There's lots of continuation moves, lots of things to do, ways to rotate through sectors, with some cute shorts, but the real money's been trying to ride this thing. And again, if you want to try a cute short, just realize that you should not be net short or have short in the brain when the sectors in your stock are above the 8 and 21 day. If they happen to be very extended from it, doesn't mean you could be comfortably getting long or you have to be long it, but it doesn't also mean that it's a short. And if it is, it could be very temporary, and you want to make sure that the current trend stays intact. And if you look at the spiders here, of the trend that this thing has been riding, okay, here is your 8. This is your gap up. Let the 8-day catch up, and it's been riding the 8-day ever since. So we'll see if that continues or not. Until the trend changes, the trend's your friend. Have a good night. I'll see you tomorrow morning. Later.